Welcome back to Real Estate Today, Real Facts, Real Truth. Bill Kessler here with Dan Cruz on Madison 1670 WDTY. We did a quick wrap up before the break on Dan's prognostications about whether this is the trough of real estate prices and real estate interest rates and what will happen if he's wrong.
Mm-hmm. Well, one thing we talked about right before the break was, based on historical data from the National Association of Realtors, is that there's 8 cycles of the housing market, starting back 10 years ago, starting phase 1 of that, or cycle 1 of that, and actually right now, if history is any indicator, we're actually all the way to cycle 8, being the final step of the housing market. My prediction, as well as a couple other important people in real estate, the president of Century 20, or the president of Realogy Corporation, also agrees with me that quarter 4 of 2010 will be the absolute low end of the market. That will be the trough of the marketplace, and we will start seeing a slow uptick in the beginning parts of 2011. And I will say, like I said before the break, that doesn't mean we're going to have this hockey stick and appreciations are going to go through the roof and things are going to go flying off the shelf. It will be a slow recovery in the housing market. However, I do think there is going to be a recovery nonetheless starting the beginning of 2011.
All right. Well, I'm a history major and a history nut, and I certainly believe in history repeating itself. Just had the opportunity to reread the history of Egypt, which is actually quite fascinating, and it was just a set of 6,000 years of cycles of history repeating itself, including what's going on in Egypt right today. So I buy into the whole 8 stages theory of the National Association of Realtors, and I buy into the fact, of course, that the market's going to recover as it always has before in both stocks, housing, and everything else. However, I'm not ready to make the prediction that this is the trough.
Okay.
And
good.
so,
I'm glad we disagree.
Right, we disagree. And I always, as a history person, I realize that you never know what has happened until it has already happened.
Sure.
And therefore, that's why it's history.
Well, and that's why this is a guess. And that's why. But the way I look at this is, you got to have some anticipation of what may happen in the housing market. I could be totally wrong, and we could jump back to phase 4.
I don't think you're wrong at all.
Yeah.
I think you're close. I'm suspecting that the negative statistics of the fourth quarter, both in terms of the economy in general and all these statistical swings in housing that we've talked about because of the 2009 tax credit closings in November and everything else, are going to cause a very sluggish start to the first quarter of 2011. Mm-hmm. And I think we're going to have a bathtub type recovery rather than the hockey stick that you said we're not going to have, so we agree totally on that.
Yeah.
And also, there's usually a slight tick up in interest rates after elections.
Sure.
And is it politically motivated? Gosh, no. Just happens to be a coincidence every 2 years for the last 120 years. Mm-hmm. Of course, it's politically motivated. So, I'm going to guess, or prognosticate, that 2010 quarter 4 is not the trough, but the trough actually is the next one, which is the first quarter of 2011. So there will continue to be excellent investments in the first quarter of 2011. And then I think the 2011 spring market, March, April, May, with closings in May, June, July, is going to be very good relative to last year, and then it's going to continue upward.
Good. Well, then we're actually pretty similar on our thoughts on the whole thing.
Right. So here's what I suggest.
Well, and let's just real quick. You made a good point before the break and said, well, what if we are wrong? Are we? Can I still buy in real estate, and will it still be a good investment, or am I? If I buy now and you guys are absolutely wrong, am I really kicking myself in the pants?
I would not be doing a speculative investment. I would be doing rock solid investments. We talked last week about one niche market of that is single family housing, and another we'll talk about today is the move-up buyer.
Sure.
So it's a great time because you can't go wrong. Even if you're off by 10%, you can't go wrong.
Right.
And so if you have a good deal today and it'd be a greater deal tomorrow, do it today because you don't know if it's going to be a greater deal tomorrow or not.
Well, and the other side is interest rates, because even if you buy today and your value depreciates still going into the first quarter of 2011, the money is so cheap right now with the interest rates, you're probably, value-wise, long-term of what you're paying in is going to be a heck of a lot better than if you buy
Right.
quarter two and your interest rate goes up 2%.
Right. And the other hedge is that if there's any realistic chance, there's a realistic chance that we have not reached the trough. There's a realistic chance then don't do the low margin investment, the 3% down, 5% down, because then your equity would be wiped out if Bill is right and Dan is wrong in terms of this quarter.
Sure.
And so if you put the 20% down, then you got the holding power from your equity to get the recovery, which is, we all know is coming.
Mm-hmm. Well, the interesting thing talking about investing, and especially real estate investing, at the lows and when we're in recession type areas, I was reading just yesterday of 3 really interesting companies that either were established or did extreme expansion during times of recession or depression. Hewlett-Packard, Microsoft, and basically the entire Donald Trump era and his entire empire. So, I mean, if you were to look at 3 powerful companies out there that did all of their major investing during times of recession or depression and where they're at today, hey, that's a great indicator.
We talked about blood on the streets, you make the move.
Right.
Well, on a very smaller scale, we, Centrotron Affiliate, have done exactly the same thing.
Absolutely. And we've, just from a company standpoint, a simple thing, during one of the toughest real estate markets ever 2 years ago, we invested in our building right on the Beltline, and we said let's be a market leader, and let's put up something and invest in ourselves, because now's the opportunity to do it.
Right. So that we've done, and we've expanded into new marketplaces and consolidated in other marketplaces they're in, and because there is opportunity for us as real estate brokerage, and there's opportunity for individual realtors, and there's great opportunity for buyers out there. So the other niche market that we alluded to over the past few weeks is the move-up buyer.
Mm-hmm.
And that's a market where there's an opportunity for a seller and a buyer, because the move-up buyer is somebody who owns property either an income property or the home they live in, and is looking to take advantage of the deflated prices and improve their situation, both in terms of maybe they move beyond that single-family home we've talked about investing, and now do want to invest in a 4-unit.
Sure.
Or maybe they say, hey, I have a nice home, I can't possibly get out of it what I was going to get out of it 3-4 years ago, but boy, I'm looking at some of these other houses that were out of my price range 3-4 years ago. Now they're in my price range because they're so appreciated.
And I think that's the second part is probably the most typical one we're seeing right now, is where somebody's living in their house, they bought it 5 years ago, and they want to sell it, but they feel they can't get the value out of it of what they purchased it for. But they see that place over in Maple Bluff or wherever it might be, and they go, wow, I can get a steal on something, and I can really get a price that I didn't think I could get on a house.
Right. Well, let me give you an example of someone we know, and he and she were 2 of the few people that I know that actually pulled the trigger on what all of us have talked about. And even though the numbers are in a price range that most people aren't in, they work at any number.
Sure.
So this particular couple had a home that was appraised, was refinanced 2 years ago at $400,000. And they decided they really want a bigger home, a nicer home, they want a better place at the golf course, whatever. And so they looked at a home that 2 years ago appraised at $900,000.
Okay.
So we got $400,000, $900,000, $500,000. So they went out and then with their realtor did a market analysis and figured that to really sell their home today, they have to sell it for $300,000.
Okay. So they take a $100,000 loss.
They're going to lose $100,000.
Okay.
A lot of money. And it got it back down to what they paid for it when they bought it in 2000.
Sure.
So then they did analysis on this $900,000 house I'm looking at and figured that the seller just wanted to get out of town, wanted to get to Florida, and had given up trying to get the high price and was realistic on the marketplace. So they made an offer in that house of $600,000.
So they $300,000 difference on the buy side.
Right. And it was accepted.
Wow.
So what happens is, as you go up in price, there's not only a greater dollar amount, there's a greater percentage of elasticity.
Yep.
Because those sellers often have more elasticity to give, and what happens? So they got the bigger house at a third off. They sold their house at a quarter off, and a quarter off of their house was $100,000. Third off the big house was $300,000. They made, in their minds, $200,000.
Yeah, it's $200,000 swing on that transaction.
Right. And because interest rates are so low, their monthly payment only went up about 25%.
Wow.
Now, that's something we've talked to people about for a couple of years, and most people are reluctant to pull the trigger.
Mm-hmm.
And that really doesn't matter whether we've reached the trough or not of the marketplace, because if we haven't, then your house is going to be worth 10% less in the next quarter, and so is the other house. So
Right.
you're not going to make the maximum move up, but you're going to make a lot more than the people that are sitting on their hands.
Yep.
And for most people, it's very difficult to do that mental gymnastics of saying, oh, I got to sell a loss, but I'm doing this so I can get someone else's bigger loss.
Well, and a part of it's the pride issue, because I bought this house. It's
Right.
my blood, sweat, and tears into
Right.
it. I can't sell it for less than what I think the value is, and we have to mentally get past some of that and say what I'm going to be making up on the investment side, on the buy side, so much greater than the loss I'm going to take on my selling my property.
Myself and Judy, my wife, did this exact thing a couple of years ago, and had we waited till now, we'd have an even greater opportunity, but we did it, and we were very happy we did it. And we got over house than we had before, and we took a little loss on the last one, and I got someone else's bigger loss than the one we got.
Absolutely.
So it is a great niche opportunity, because even though there's 10% under an unemployment, 90% of the United States and Madison-Dane County for sure are doing great.
Absolutely.
Or at least fine. And so blood on the streets, take it.
Take advantage.
So Dan, it's good to have you here again today on Madison 1670 WTDY, Real Estate Today, real facts, real truth, and a couple wrap-up thoughts for the market in the next couple weeks.
Yeah, opportunities are out there. Go get them. Enjoy the fall. It's a great marketplace. Great time to get out there. Also want to tell everybody to get onto our website. Check us out at www.century21affiliated.com. We're podcasting all these on there. You can go back and check out all our past shows. And if you got questions on the marketplace, questions on investing, questions on the move-up plan we just talked about, give us a call, 608-221-2121. Talk to one of our real estate professionals. We'll give you the full rundown on how to attack this marketplace.
Or you can text me, 772-2912.
All right? Bill, hey, go Pack this Sunday.
I think the Pack will do a very fine job, and I think that they will do what they've done many years in the past, which is almost win.
Okay. Hey, we're going to finish ahead of the Bears in the conference. That's all I really care about. Madison, you enjoy your Sunday.
Have a good day.